I would now like to introduce today's presenters. Rishi Rajagopala is a practice director in Everest Group's global sourcing team. In this role, he assists clients on topics related to global services delivery locations and workforce strategy. Banushi Malhotra is a practice director in Everest Group's sourcing and vendor management practice. In this role, she advises clients on maximizing value through their supplier-based engagement to obtain cost, business, and operational benefits. Rajesh Ranjan, partner, leads Everest Group's business process services, syndicated and advisory practice globally. He advises senior stakeholders that include buyers, providers, and investors in their global services and enabling technology mandates and initiatives. Prashant Shukla, Vice President, leads Everest Group's financial research practice. In this role, Prashant leads the Executive Insights Program for CXOs within IT and business process provider organizations. And with that, I'd like to turn things over to Rajesh.
Thanks, Peter. Again, good morning, afternoon, evening, everyone. Thanks very much for taking time out to attend this webinar. Me and my colleagues are truly excited to be here as we plan to crystal gaze in terms of what 2023 holds for global services industry. First up, we plan to quickly understand the macroeconomic backdrop, and within that backdrop, what are we expecting in terms of IT BPO services growth and enterprise key priorities. Next, we plan to discuss 5 trends. We are also calling it these as 5 forecasts that will meaningfully shape the enterprise adoption and the market. Lastly, we plan to share 5 actions that you, as buyers and consumers of these services, must take to not only navigate, but succeed in 2023. For sure, we would love to hear from you in terms of your questions, reactions, and anything in between. So please do share that in the chat, and we will do our best to address those as part of today's webinar and discussion. The last point I would want to make is that our insights and forecasts that you see in today's webinar is coming from multiple proprietary sources of information. One of them is the Key Issues Survey, where we received responses from over 200 global organizations in terms of their issues, priorities, and directions for 2023. Of course, we have layered that with a lot of our ongoing research in this particular space. With that, let me invite my colleague Prashant to first give us a kind of a glimpse of why we are calling it an uncertain situation, uncertain economic environment. Prashant.
Thanks, Rajesh. Well, I have to start with a slide which is not very surprising, but still one of the most important to establish the current reality, right? So the reality is that all the macro indicators, be it treasury yields, be it inflation, be it the loan activity, they all indicate towards a considerable level of economic pressure, and at some level to a potential recession expectation, right? So what does all of this translate in form of actions by the organizations? As you will see in the next slide, you'll see that the enterprises and service. So if we can look at the next slide, what we'll see is that the companies, right, be it enterprises, be it service providers, they are all acting in some sort of a fear of a recession, right? We have seen large organizations taking conservative stance towards their human capital to an extent of layoffs. And all of this raises a question, right? Is this a secular trend? Which is a very important question. And if you look at the next slide, the answer is maybe not, right? Because the unemployment levels, as we all know, they are much lower than the job openings. And there are several core indicators which suggest very strong demand for talent. And this is not just the service providers, but also enterprises, right? So it's quite well established that talent is continuing to be in demand now and going into the future. So that's how we are seeing the things panning out, right? There are mixed signals. There's nothing secular per se as of now. And that's why we would call it an uncertain environment. So I think Rajesh has some interesting question for the audience here.
Hey, thanks, Prashant. So clearly, we are in this kind of a uncertain environment. Few things seemingly known, multiple things unknown. But within that, the question that we want to ask is, hey, how do you describe your own business growth outlook for 2023? Right? And we do understand that it will vary by the geographic areas or the geography that you operate in, the industry that you belong to, and probably also by the size of the organization. But we are very curious to understand what this group thinks about, what is their growth outlook for 2023, right? And that will kind of help us as we kind of get into the rest of the webinar to also kind of contextualize. So we have the poll live, and we already see quite a few of you have responded. Others are possibly responding. Okay. Interesting results coming through. So the poll is closed. And are we seeing the results? Okay. So hopefully the results are visible. So what we see here is that, well, it's kind of interesting, right? Because a bulk of the respondents here are what I would call it cautiously optimistic, right? So close to 75%, if my mathematics is right, which are either neutral or somewhat optimistic. So, that pretty much summarizes it, cautiously optimistic, which seems to be the mantra going on, but it's kind of interesting, right? So with that kind of cautiously optimistic situation, let's kind of look at what is our analysis and forecast reflecting. Prashant?
Yeah, thanks, Rajesh. And absolutely, I mean, more than 50% are on the optimistic side, and it's very encouraging. Now let's talk about the services, right? And very interestingly, what we have started seeing over past few months is, you can call it an unforeseen development. So historically, you'll see that the services have moved kind of in sync with the global GDP. However, what this slide shows you is that in the last 12 months or so, we have observed a certain level of disconnect between the two. And you see that while the GDP and all the concerns, they were playing out and the GDP was kind of decelerating, the services industry in itself accelerated, right? And that is once in the history, right? Because so far the perception has been that, okay, these are services, they'll kind of move in track with whatever the global demand is. But these are the times when you see that there's a disconnect, and we want to call this out again and again, that this is a very interesting observation which we are making. And to understand about the future expectations, I would like to invite my colleague Rishi. So Rishi, how do you see this framing going into 2023?
Sure. So, Prashant, similar to what we saw for the global business outlook in the poll question, we see the outlook towards global services industry to be positive. More than 80% of enterprises expect the global services budget to either remain flat or increase, with more than 40% being optimistic about growth in their budgets for global services. And if we look at some of our internal forecast on how the industry is expected to perform in 2023, we are forecasting a growth of 4.5% in a base case scenario for the next 12 months. Now, what this is lower than the 12% growth that we have observed in the past 12 months. It is to be noted that 2022 was an exception driven by pent-up demand and the lower base effect. If we compare the forecast with the past few years, the industry in 2023 is expected to outperform the historical growth that we have observed between 2018 to 2021. And there are multiple reasons that we see behind this, and we looked at some of the challenges that enterprises perceive going forward in 2023 and the priorities. And Bhanushree, you have looked at this in detail. So if you'd like to focus a bit more on what challenges and priorities enterprises have in 2023.
Yeah, thanks, Rishi. So, like Rishi pointed out, right, what is the top of mind issue for enterprises going forward into 2023? And the first rank that we saw over here was price and cost pressures, which has been bumped up from a rank of 2 last year in 2022 to a rank of 1 now. So this was a very interesting one, and we've been seeing a trend with the enterprises that we've been talking to as well on this angle. Service providers are asking for increased bill rates, right? So this type of pressure is getting transferred to enterprises, and they have to deal with the increased bill rates and how to fit it into their budgetary constraints and all of that angle. So that becomes a top priority. And if we think about, again, comparing it with last year, 2022, the top priority used to be talent at that time, which is at number 3 right now. So talent and skill shortage hasn't gone down too much. It's about, whether enterprises are able to find the right talent at the right time, and whether they're able to suffer the cost of talent also, of obtaining it from whether tier 2 locations, tier 3 locations, or all the types of new age talent models that are coming up now. So that is also a priority, but that has come down significantly when you compare it with something like cost. Now, if we look at rank 2 over here, adapting to evolving customer needs, business models, conversations around hybrid business models, the evolving business scenario, the demand that is changing, the satellite tier 2 cities, all of these conversations are increasing by a large extent when we talk to enterprises this year. And the fourth one, I'll just point a little bit of reference to the last slide that Rishi talked about. So there was pent-up demand last year, and now there is slowdown in demand, right? So if you look at the rank over here in 2022, it was 10. Nobody was even worried about slowdown in demand last year because there was so much pent up. But now that is increasingly becoming a factor. And if you think about it intuitively, then of course, with the upcoming macroeconomic scenario, recessionary trends, this was bound to happen. So with all of these challenges in mind, I'll go down to the next slide, which will talk more about the business priorities. Right. So this is more of an actionable type of thing. What is business thinking about going forward? So the first thing, of course, is cost optimization. They're thinking more about whether they can, decrease again from the pricing perspective, which I spoke about, service provider bill rates. But the second part is also about scope recalibration. Can they also address the Q part of the P and Q equation? So all of these things are becoming very important for enterprises. And of course, digital transformation and productivity improvement. These are also factors that are becoming more and more important. Just talking a little bit about productivity improvement, right? Think about things like new initiatives that you can undertake, or new automation or process improvement type of areas that enterprises are thinking about. They're engaging more and more specialist providers as well to be able to undertake these type of activities. So these are the things that we're hearing across organizations and what we've been hearing across the board. So with that, I'll hand it back over to Rajesh to move to the next section now.
Thanks, Bhanushree. So now we understand the broad contours of how do we expect 2023 to kind of play out. Let's try to kind of unpack 5 key trends or forecasts that will shape the IT BPS market in 2023. So if we move to the first one. So the first forecast that we have is, and you got some kind of a cue on that, is the talent demand supply mismatch will continue. Now it is interesting because if you compare it to the previous recessions, we haven't found this to be the case. So what is happening here? Rishi, do you want to kind of talk about that?
Sure, Rajesh. So indeed, it is interesting and contrary to what we have seen previously. What we need to realize is we are in the midst of a globally constrained labor market because of acute shortage of engineering IT talent. If you look at US or Western Europe, there are more people who are giving the workforce than joining it. And universities are not producing graduates at a level at which the industry demands. So that's what the talent demand gap is reducing in or expected to reduce in 2023. The demand will still be higher than the supply for next 1 to 2 years. In other words, there will be more jobs than people to fill them for experienced roles in engineering, IT, or other skilled labor. Skills such as IT security, DevOps, automation, they will continue to witness high demand supply mismatch, though we expect traditional application development or other infrastructure services to normalize over time. Now, if we look at the key talent-related priorities for 2023, what exceptionally high growth in the past 2 years forced organizations to hire aggressively. Going forward, we expect the focus to shift towards internal talent management, including learning and development initiatives, employee experience as levers to upskill existing talent or improve retention. The nature of work continues to change, and hence upskilling existing talent becomes critical, which is also the #1 priority across enterprises and service providers for 2023. Further, as most organizations struggled with exceptionally high attrition in the past few quarters, they are now investing in improving organization culture and employee experience as a lever to improve retention and lower attrition.
Okay, so that was the first one, right? Which was again somewhat contradictory to what we have seen in the previous economic downturn. And the second one actually continues that thread, right? In the past, the economic downturn, recession, all those things lead to a decline or kind of pressure on provider bill rates. But our forecast is that we expect provider bill rates to increase. That's again very interesting. Bhanushi, what's happening here?
Yeah, true, Rajesh. Very interesting, right? Contrary to what you would expect. And again, we expect bill rates to increase in 2023 across outsourced services. And there are various ways in which we feel that organizations will have to, step up and sort of beat the curve within that area, right? So the first, and there are various levers mentioned on this slide, right? But I want to point out how you can prioritize some levers when you compare them against each other. So the first one being the most obvious one, right? Renegotiation. I'm working with sourcing professionals. Renegotiation is the first thing we usually go ahead with, right? You do a basic benchmarking across the market, and then you try to just get down the rates. But then there are many other things that you can do as well to optimize cost. And I would like to bring your attention to that on the second box that is here on the slide. The first one being related to the productivity conversation that we were having, changing the level of automation and getting more resource efficiency and productivity savings within your initiatives. This can be done across service stars within services categories. And there are many, many vendors that can support you to undertake these type of initiatives, right? And this goes back to linking it to all of the things that you're doing within your performance scorecard as well. If a supplier comes to you and he is able to get you productivity savings, then there is a benefit that he should be able to gain out of that as well. So it goes back to all of the things that you would put in your contract, or whether you would encourage your supplier in your innovation councils and across the board, right? So that is one thing. And the second one is related to adjusting your shoring or locations mix. So we've seen, we were having a lot of conversations around more is more, right? So more suppliers, more locations. But over here now with the recessionary trends, we're talking more and more about how you can probably leverage some of the unheard of locations within outsourced services. We've seen more service provider setups within these obscure locations, and apart from India and Philippines and the usual ones you would have seen. And service providers are increasingly leveraging these locations to be able to optimize costs better. And of course, then there's other things like recalibrating your scope, addressing the queue aspect I spoke about earlier, adjusting your role mix, and the last one, of course, being limited changes to price, which is not a very popular lever across enterprises. But that is also an option, that you take a hit on your margin because the market in terms of service provider bill rates is going in an upward direction. So sometimes you will have to do it, right? So that is the trend that we've seen and the levers we've seen organizations adopt. But if we move to the next slide, we'll see that, this rate of bill increases is relatively lower than what it was within 2022. Right. So if you see the dark blue over here, it points out the 2022 rate, and the light blue is 2023. Across the board, across BPS as well as IT services areas, the rate is always lower than what it was at 2022. And if you see the trend over here, again, very high for cloud and cybersecurity services, but not so high for the finance and accountings or the industry specific areas such as banking and insurance, as well as customer services. So very interesting to see the trend across areas, but also links back to the discussion that some skill sets are more in demand. And that is why the bill rates linked to those skill sets will be higher than what they would be for the traditional skill sets. So with that, I think we can move to the next forecast within our crystal ball.
Yes, sorry, Vanushi. Before we move on, I'm also seeing that there are some questions that have started to come through, right? And let me kind of pick one of them, which has come from Sankara. It says, hey, how do you see the demand supply talent gap on GBS side? Rishi, if I were to kind of ask you to comment on that, what are you observing? What is our forecast there?
Yeah. So see, I think the demand supply mismatch is universal, irrespective of a GBS or a service provider. Both of them we are seeing struggle, at least at the moment, we see both of them struggling to hire, or especially for high-end niche skills. And we expect that to continue for some time.
Good. And just sticking to the talent, because I think there's one more question I think has come from Tom. He says, do you see a rise of business technologists roles in 2023 and 2024? So let me address this, and I'll now invite my colleagues, fellow panelists to also chime in. For sure, to me, it's very, very clear. Yes, what we are observing is there are technical skills, and of course there are certain gaps, and then there are business skills. But the real impact gets created when these two things, right, come together. And the talent that understand the technology and its impact in the business context, that pool of talent is fairly limited. And as we think about enterprises, what we are seeing is, and then kind of in a way we know that, right? Technology for technology's sake means nothing, right? It has to create the business value. It has to create the business impact. So from that perspective, we do see the rise of business technologies, and we do see this, rise in the demand will continue in a more accelerated fashion in times to come. Okay, so if we can move to the next forecast, which is what we are calling it as, hey, we see significant service provider portfolio rebalancing by enterprises is in the cards. That means there are going to be some rejigs, there are going to be some changes, right? So what is happening here and why it is happening here?
Yeah, Rajesh, I think what also happened is that it kind of syncs with the question which we just had, right? The need for business technology and experienced talent. And that's what has happened. So, well, almost needless to say, during the pandemic, the service providers played a kind of a pivotal role for the enterprise clients, right? They stood by their enterprise clients. The result was very clear, as you'll see in the chart here. From 2020 to 21, the satisfaction of enterprises with their service providers, it rose sharply. However, now this is the part where it gets interesting, right? With the unfolding of events, the digital transformation became more and more center stage, as Bhanushi also pointed out in one of the earlier slides. That there was a tremendous demand for digital transformation, and that also created significant demand for persistent experience talent. And let me explain what persistent means. It's like the term itself. So it's the same set of people working closely with the enterprises on their digital transformation journeys. Right? So that kind of talent was in really high demand. Now, this proved to be one of the biggest challenges for the service providers, right? As they were witnessing sort of an unforeseen employees market, high level of attritions, people leaving left, right, and center, a lot of experience getting lost, right? To an extent that we did an internal calculation of, if an experienced talent leaves, they take time to ramp up in the next organization. That's kind of millions of hours of experience lost in a year. So that was happening. And what was the result? There was a sharp drop in the satisfaction levels coming from 2021 to 22. Now, this has been the case, and it's kind of a journey, right? We all are part of it. So looking ahead, how has it translated into actions and some of the plans of the enterprises? Looking at these dynamics, they have kind of created some notable changes in the way enterprises plan to leverage their service provider relationships in 2023. So if you go to the next slide, what you'll observe are a couple of things which are happening, right? The one is that more enterprises are willing to rebalance their work across providers. That's a major change we have observed. And secondly, there are more enterprises which are looking to consolidate their service provider portfolios, right? So now, given that's what's happening, that's a reality. This is a need of the hour. So what should the service providers be focusing on? And very interesting, Rajesh, we have also received one of the offline questions, right, which says that what are the areas where service providers can help their customers to succeed in this economic uncertainty? And the answer is the next slide. Very simple, right? It's all a matter of ROI. You provide the best service quality and high productivity. And that's where we have seen the two top ranking performance parameters which enterprise expect the most from the service provider partners, right? So that's how, and by the way, productivity has always been amongst the top three, right? For a very long time. It has gone up from 3 to 2 this year, and for very obvious reasons. So that's how we have seen the dynamics of enterprises and service providers evolving in as we look into 2023 in these uncertain times, right? And so, yeah, I mean, if you have, Rajesh, what would you like to comment on that?
No, absolutely, Prashant. Thank you. So it's clear that, as enterprises are thinking about navigating and succeeding, they want to have the right partners in place. Some of their experiences in 2022 will influence that. Some of their expectations in terms of what they are trying to achieve and what provider is bringing to the table will play a role, right? And as all of these things play out, there is going to be rejig, right? And it's less about rejig, but it's about, how do I kind of align my portfolio against the business objective and the business objective of 2023 to achieve them and achieve them with confidence, right? So that's the kind of a scenario we expect to play out based on our research and some of these results that we're getting through our outreaches and surveys.
Yeah, agreed, Rajesh. And I think one of the things that is also happening on that end is that, parallel things are happening together, right? So some enterprises, they're doing consolidation first, and then followed by that, they're doing scope rebalancing. So it's not that we've said that consolidation will happen or specialist provider addition will happen. So only that is happening. It's a combination of multiple steps along with, aligned to the objectives that you have within your organization.
Yep,
And I think
absolutely.
this current slide gives you the gist of it, right? So because so many moving parts, I think the top 2 focus areas would just solve the equation for you.
Yep. Okay, good. If you move on to the next one, and this forecast is more around the continued evolution of service delivery model. What do we mean by that? Rishi?
Sure. So there are multiple levers to service delivery model, and we are witnessing disruptions across many of them. But the key objective remains same: reducing service delivery cost and improving access to talent. Those are the 2 primary anchor to what we see a disruption in the service delivery model. First and foremost, remote hybrid working models. We see that growing. We have already seen organizations shifting back from fully remote to hybrid working in 2022, and we expect the trend will continue in 2023. As we speak with our clients, most of them plan to have a hybrid working model with only a few teams working completely remotely. So that's something that we expect to change in 2023. Further, the next theme is around increasing or expanding your presence of delivery centers to tier 2, 3 locations. There are multiple reasons why companies are doing that, be it around reducing the services delivery cost, getting access to untapped talent pool, or being able to support from a location with your market congestion attrition. So these are some of the key factors which is now pushing organizations towards tier 2, 3 locations, not just in onshore geographies, but in offshore locations as well. And beyond this, we are also seeing there's a growing appetite to grow or explore untapped new countries, be it in Africa, Asia Pacific, or other geographies. So there are multiple angles which companies are leveraging, right? And then with that, if I also talk a bit about what geographies are expected to grow, and I see there are multiple questions which are coming around whether offshoring is expected to increase versus others. So as cost savings becomes a key priority, we expect leverage of offshore locations to continue to grow. And based on our survey, we see both enterprises as well as service providers, they plan to significantly expand in offshore geographies, again with the primary reason being to reduce cost and to tap into the large talent pool. But having said that, it's not that as if nearshore, onshore locations are witnessing a decline. They will also continue to grow a bit at a lower rate. And the primary considerations for growth in nearshore, onshore will be to either gain access to niche talent, language skills, time zone advantage, client proximity. So some of those continue to remain. Right? And with that, Rajesh, do you want to move to the next trend?
Yeah, before actually we move to that, if you go back to this, right? Because again, we are getting some questions, and I think those are very related to this. So I know that, probably in the last 24 months, the number of inquiries and the number of projects, number of initiatives, number of help that you would have extended to both enterprises and providers in terms of just selecting, identifying, and really thinking through their location portfolio, like has been unprecedented, right, Rishi? So
yes,
from that perspective, one of the questions that have come along is, hey, which low-cost centers could we tap into? Meaning, I think they're talking about which are the possibly newer, locations that are emerging. Of course, India and Philippines, we all know about that, and their value proposition is proven. But from your experience working with so many enterprises and providers, and our fundamental research, what new locations are you seeing come through?
Yeah. So there are 2 types of locations, if I have to speak. One is where you already have a presence, let's say in an India or Philippines, And there, the appetite is to explore tier 2, 3 locations, newer locations where they were not present before. And the other is to explore entirely new countries as such. So we see Vietnam to be growing. We see locations in Africa to be growing. So there is a growing trend towards geographic diversification and exploring new and new locations entirely as such.
Got it. Oh, thank you. Thank you, Rishi. Okay, so with that, let's move on to our fifth forecast. When we are saying pragmatic digital investments will be prioritized over moonshot investments. That's interesting. What are these pragmatic digital investments and what are we calling moonshot investments? Prashant?
Yeah, no, that is so Rajesh, we have been kind of using this term called digital pragmatism, right? And it has been like the next in the digital economics itself, wherein if you think about it from the pre-pandemic times where a lot of these next generation investments were still, proof of concepts, the pandemic has kind of tippled a lot of them towards real high capex investments. So, well, what has happened now with the cost mandates and the need for ROI, going into 2023, what we are seeing is that there are some of the usual suspects of digital pragmatism, right? So the top rankers would be the ones which you can almost identify, right? You could have almost guessed, and they remain as one of the as few of the key areas where enterprises would like to spend their budgets on. And very categorically, we received another question, like there's an offline question that what's the rank of security? Security remains very high, just to answer that question. It was number 2 last year. It stays number 2 now. And even in the future, we don't expect it to go further a lot down because, with the digital channels and so many things happening, cybersecurity is going to remain one of the key priorities. So, yeah, I mean, it's not a surprise, but when you talk about pragmatism, practical investment on next generation digital technologies, cloud, cybersecurity, analytics, AI, automation, these are the few areas which is anyone's guess, and they remain the same. Like the ranks are almost the same, right? So compared to the last year. Another thing, by the way, the interesting thing to note in this slide is the bottom of, right? So what's happening here is that the key areas which were gaining traction in the recent quarters and like in 2022, be it IoT, metaverse, 5G, they have kind of gone down in the priority ranks for 23 by the enterprises. But this is mainly due to their stage of investment, right? They were in the early stages of investment. They were still testing. They were still looking for the returns from these investments. While they have gone down, we continue to have this conviction, right? And we have very high conviction that these are high growth potential areas, which will define the future of technology investments. And they will kind of start coming back in demand as the dust settles on the recessionary environment. So we won't be surprised if some of these will start appearing in top 5 in our future surveys, right? And by the way, we also got an offline question around the state of metaverse. So yeah, as you can see that it has kind of gone down. It is number 11 in priority, but we all can agree that given the times, uncertain times, it's more around investing on run the business versus change the business. And the important thing to note here is that now the next generation concepts of AI analytics, they have become center stage, and they are fueling the core operations of enterprises. They remain high, and the next generation, the ones which we were talking about in 2022, like metaverse and others, they will come back. There's no doubt about it as soon as the dust settles there. So that's what we have learned in terms of the top digital priorities.
Thanks, Prashant. So in a way, 2023 is not going to be the year of experimentation for the sake of it, right? This is going to be an year which is of course, geared towards capturing that business value, and some of these business value will be oriented towards cost, right? And hence that is the place where, what is called some of the proven tools and technologies, right, are going to gain prominence, going to get greater attention than the other ones. Okay, good. So with that, as we shared these 5 trends that are going to shape, influence very meaningfully the IT BPS services, let me kind of talk about those 5 actions that enterprises must consider and take to remain successful, to navigate successfully, to succeed in 2023. So if we can move to the next page. So, I mean, upfront, I believe, one of the things that would have been clear is, or let me put it this way, there's one thing that is certain for 2023 is that there will be a lot of uncertainty. So our first recommendation is not to spend too much time second guessing the external environment in terms of how that will play out and so on and so forth, but rather focus on building agility in our global services approach to respond fast to evolving situation. It will require scenario planning. It will require putting the right levers in place. It will require putting the right org structure in place to be able to, again, respond as the situation unfolds and respond with speed, respond with certainty. The second one, and we talked about it, right? We don't think that talent shortage is over. In fact, we see some of these are secular issues across multiple skills. While it is, as Bhanushi was kind of sharing, right, it is kind of more prominent in some of the next gen, even in the traditional areas, as we see that the nature of work continue to change, the skill requirement will continue to change and will demand to change. So it becomes important for organizations to focus on reskilling and upskilling. And we believe that aside of other things, this will also be a key retention tool in the times to come. The third one is really around service delivery model. As we kind of talked about, it is evolving and maturing across various dimensions. From a location perspective, as Rishi touched about, we see new locations emerge across the globe with very interesting value proposition. There is a rise in gig workforce. And it is not only in terms of what organizations are trying to offer, but more importantly, how talent wants to be employed. So how do we harness all these things to respond becomes important. Clearly, as Prashant was kind of talking about, digital pragmatism is going to prevail, right? But that does not mean we become kind of myopic about it, right? And one of the key things, again, that is the place where this recession, we believe, is going to be different than the past, because in the past, the tools and technology or technology spend has always been seen as discretionary. In the world that we live in the digital age that we live in, is that discretionary? In a lot of places, we don't think that's discretionary. And hence, one has to be kind of thinking and approaching that ways, because in a lot of places, it's integral to value capture. And last, and I also see some questions coming through on that. We said we do see potential rate increases. Probably there are ways to challenge that. But the provocation is, should we be focusing all our energies there? We believe and we encourage you to think broader. We encourage you to think through this in terms of business value and impact than just the operational cost. And when I'm talking about business value, it is still rooted in cost optimization, but it is about creating that cost optimization impact on a larger base. So for example, if you're thinking of collections, should we be worried about the marginal increase in the operational cost of FTE doing the work? Or should we be thinking, engaging our providers to reduce delinquency and increase collection? For sure, the latter will yield disproportionately more value than being myopic about it. And that's why we are saying, hey, don't miss the forest for the trees. Okay, so with that, I will want to kind of move on to the next one. Just wanted to kind of highlight that as part of today's sessions, and this is exclusively for enterprises and GBSs. You can get a complimentary briefing curated for your department based on this survey. And you will see that in the chat, there is a link that is provided. I'd encourage you to click on that link, choose the one the one that you are interested in, and you will see us kind of following up with you to kind of arrange for that. Okay, so this is, as you are doing it, what I see is there's a bunch of questions that have come through, quite a few of them and very interesting ones. So let me kind of see how many that we can address. Okay, so let's see. Okay. So I'm just kind of browsing through. Okay, so one of the questions that has come along, you mentioned cost takeout as priority number one. Is there any evidence of large cost takeout or captive carve-out projects? Okay, interesting. Our research has shown that during economic downturn, the captive carve-out and some of those radical measures go up 2.5 times compared to normal times. So do we expect that to increase? Yes. But the real question is, where is this going to happen, right? And that is the place where it becomes nuanced, right? That is the place where it is less about just the cost takeout. It's about what is the strategic position that shared services, GBS, captive, GIC has assumed in the enterprise journey. We see a lot of GBS organization shared services who have been able to create meaningful value, who have earned the seat on the table. In fact, in these situations, their prominence go up because they can create that kind of a value, which possibly a provider can do, or in some cases better. On the reverse, if they have not been, then that is the place where enterprises, especially those enterprises which are not in that strong financial position, take that call and carve out their captives. So that's the kind of somewhat of a longest answer, but hopefully that addresses this question. Okay. Okay, so one of the questions that has come along is, and I think we addressed it, but let me kind of see again, any insights on the shift, if any, on preferred offshoring destination? Is Africa catching up? Rishi, is Africa catching up?
Definitely, Rajesh. We see increasing interest in Africa. But the size and scale is still small, but there is an appetite to explore Africa, especially for European delivery. So a lot of locations offering good French language skills apart from English language skills. So that's also a value proposition that Africa is offering currently. So definitely there is an increase in appetite to explore Africa, especially for European delivery apart from regional.
Okay, good. One of the other questions that have come along is, hey, do you see enterprises using more of partner centers or build their own GIC, GBS in 2023 new locations? Banu, Rishi, what's your observation? What's your expectation?
Okay, so if I look at 2022, there has been a significant growth in GBS center setups, but that has not been at the cost of exploring partners. Now, if I have to crystal gaze into 2023, and given what we expect in terms of the economy, I expect there will be a greater appetite to explore partner centers before moving into a large capex commitment.
Yep. Yep. No, that makes sense. That makes sense. One of the questions that have come along is, are rate card increases is the average worldwide? The question is not that clear, but are rate card increases, what is it reflecting? I think this is reflecting off across, onshore, offshore, and all those things. Of course, the extent of the increase will vary, and that will vary across multiple factors. One of the things that we showed around is the nature of work, but it also will vary by geo and so on and so forth, right? Vanushi, do you want to kind of comment on that?
Yeah, agreed. It's all across the globe, right? The increases that we are talking about. And of course, we mentioned the service specific angle around it on the slide itself, but across industries, geographies, and other aspects is mostly common onshore, offshore, etc. So the rate will also be different across onshore and offshore, right? Okay. That is the point to know. Yeah.
Okay. So a lot of interesting questions. Thanks, guys, for sharing that, and keep those questions coming. We do want to kind of address as many questions as possible. So there's this question from Boris, says, do you see significant changes on the sourcing spectrum, ranging from pure staff augmentation to outsourced delivery? Vanushi, do you want to kind of take it on? Prashant, and others, feel free to chime in.
Yeah, so I think this has been a very ongoing conversation since time immemorial, right? Shift from the sourcing spectrum when it comes to moving towards outsourcing. So I think the shift has been mostly consistent. We have not seen that it has increased a lot, at least as of the data right now. But then if you are an enterprise and you're thinking of these things with respect to your providers, then what are you supposed to think of from a sourcing lens? Right. So starting with basic things such as whether you want to outsource or not, you think about the why are you outsourcing aspect of it. Then you think about the make versus buy modeling. What type of impact will it have on your risk levels or on the type of service that you're outsourcing? Is it critical to your business? All of those aspects will come in. And then, of course, you will move on to the where aspect, which Rishi can cover really well, right? On the locations part, where should you go now that you've decided to do it? And who should you go to, which is on the supplier selection aspect of it. So once you decide all of these things, you will then come to the management part, which is on typical, right? Sourcing, contracting, and supplier management once you've decided to go that route. So that is definitely, the entire process cycle, which we've seen enterprises undertake. And it's a very, very long and tedious cycle, but it should be done well so that you actually end up getting the maximum value out of these type of contracts.
I think there's also a lens of, if you look at the current context lens, and as we are talking about uncertainty in 2023, if you look at the history, whenever there's kind of an economic compression, uncertainty, a lot of enterprises tend to move to, say, carving out their units, right? And the service providers tend to take the rebadging initiatives, they tend to buy the assets. What we are seeing differently this time is there's also a focus on margins. So there might be nuances where service providers might be moving away from a lot of low-end rebadging projects, right? And this is something which we are hearing because their focus is a bit higher given all the other cost pressures they are facing to get into a high margin business. So maybe the things will play out differently this time compared to previous recessions. But I agree. I mean, it's yet to be seen. But generally, in terms of tough times, asset leverage deals, transfer of assets, carve-outs, they are common. And we'll see how that happens now.
Okay, good. Okay, let me kind of pick up another question. Okay, so this one is interesting, right? So there's one question that is around, sorry, I lost that question, but let me kind of pick that. While many of the tech, this question from Sudhir, right? While many of the tech non-pragmatic seem to be scoring lower in priority, there is also a view in some segment that the strong demographic shift from silent to millennial generation in the next 1 to 2 years needs an emerging tech-centered roadmap carve out. Any thoughts? Prashant, do you want to kind of?
Yeah, so I was reading this, right, as you were talking about it. And that's a very interesting question. And yes, those are the fundamental undercurrents of the industry. And that's where the industry was headed before we got into all of this ongoing mess. I mean, for lack of better terms, right? And yes, I totally agree. And that's why I said that all those, the lower table in our ranking, right? They still hold a very high value, right? And those are not getting faded away anytime soon because they are defining the future of technology, be it metaverse, be it IoT, be it 5G, be it edge computing, be it Web 3.0, whatnot, right? And they were in vogue not just for the sake of it. They were in vogue because the whole industry is in sort of a mega cycle. And this mega cycle is definitely defined by the factors, one of which you have mentioned here correctly. So yes, the answer is yes, they will come back, and they will come back as soon as the cost pressures and the recessionary dust get settled.
Okay, good. So we are probably just going to be out of time, but there's one question. Would back to office push affect service models, right? From Nitin. And Banushi, do you want to kind of address it? Probably this is going to be last one.
Yeah, I think Rajesh, this correlates to the recent conversations we've been having with a lot of enterprises and service providers, right? So a lot of questions on return to office. How will this affect service models? Do we include more contracting nuances within our contracting or pricing models, etc.? So I think many different angles can be explored on that aspect. But if we have to answer the question related to costs, then it can be fairly a good assumption that many cost elements would not be impacted at a very high scale. You can only expect, say, a 2 to 3% increase, if any. And things such as facilities and all will increase, but tech telecom will likely decrease. So there's a direct linkage in that sense. But of course, then there are other things. When you look at the shift to hybrid working models, you have to think about whether it will impact your productivity or your attrition and all of those talent related aspects that we spoke about.
Okay, great. So really at the top of the hour here. Again, thank you guys. Thank you very much for taking time out and participating in this discussion. Thanks for all the great questions that came our way. We definitely enriched the conversation. As it was kind of mentioned earlier, we will kind of follow through. You will get a kind of of this presentation, the recording of this session. Again, very much appreciate your time and have a good rest of your day, evening. Take care. Bye-bye.